Most traders don't blow their accounts in one catastrophic trade. They don't lose everything in a single moment of recklessness or a flash crash they couldn't escape. No, the truth is far more insidious, far more personal, and infinitely more common. They bleed slowly, methodically, trade by trade, decision by decision, click by click. It happens so gradually that they don't even notice the wound until it's too late. One extra trade when the setup wasn't quite there. One emotional decision driven by the sting of the previous loss. One moment of boredom where the silence of an empty chart became unbearable. These aren't the dramatic failures that make headlines or viral posts. These are the quiet killers, the invisible thieves that drain not just your capital, but something far more valuable, your edge. Overtrading doesn't just cost money. Let that sink in for a moment. It costs clarity, the ability to see the market objectively, without the fog of desperation or the haze of overconfidence. It costs discipline, that sacred muscle you've spent months, maybe years, trying to build, weakened with every impulsive entry. It costs confidence, the quiet belief in your system that separates profitable traders from perpetual gamblers. And here's the truly dangerous part. Most traders don't even realize it's happening. They're in the thick of it, caught in the current, mistaking motion for progress, activity for productivity. You tell yourself you're being active, engaged, committed to your craft. You tell yourself that more screen time equals more opportunity. But deep down, in those rare moments of honesty between you and your trading journal, you know the truth. You're not trading your plan. You're trading your emotions. You're not executing your strategy. You're executing your anxiety, your boredom, your need to feel like you're doing something, anything to justify sitting in front of those charts for hours. This isn't a lecture. This isn't judgment. This is recognition. Because if you've ever felt the magnetic pull toward your trading platform when no setup exists, if you've ever entered a position just to be in the game, if you've ever looked at your trade history and wondered why you took half of those trades, you're not alone. You're human, and you're about to understand the real cost of what's been happening. Let's talk about the emotional cost of overtrading. Here's what most trading educators won't tell you. Overtrading isn't about how many trades you take. Read that again. It's not about the number. You could take 50 trades in a month and not be overtrading. You could take 5 and be guilty of it. The quantity is meaningless without the quality of the decision behind it. Overtrading is about why you take them. It's about the emotional state that precedes the click. It's about what's driving your finger toward that entry button when your system hasn't given you permission. This distinction is everything because it means you can't solve overtrading by simply limiting your trade count. You can't trick yourself into discipline with arbitrary rules like only 3 trades per day if you don't address the root cause. What drives overtrading? 3 invisible forces that every trader knows intimately but rarely names out loud. First, boredom. The market is quiet. Your strategy hasn't triggered. Hours pass with nothing but sideways price action and your mind starts to wander. You didn't sacrifice your evening, wake up early, or skip that social event just to watch paint dry. So you start looking for trades that aren't there. You lower your standards. You convince yourself that this setup is close enough. Second, fear of missing out. FOMO isn't just about jumping into trending stocks you see on social media. It's subtler than that. It's seeing price move without you and feeling left behind. It's watching other traders post wins while your account sits still. It's the nagging voice that whispers, "Everyone else is making money right now. Why aren't you?" So you chase. You enter late. You abandon your criteria because the pain of watching opportunity slip away feels worse than the risk of a bad trade. Third, the need to do something. This is perhaps the most dangerous because it masquerades as professionalism. You're a trader, right? Traders trade. Sitting idle feels lazy, passive, like you're not really working. Your identity becomes tangled with your activity level, and suddenly, not trading feels like not trying. So you create action where none should exist. You manufacture setups from noise. You confuse motion with meaning. and every trade becomes a small act of self-sabotage disguised as dedication. Here's the part that keeps me up at night when I think about traders I've mentored. Every unnecessary trade weakens your discipline. Every single one. And here's the kicker that makes this truly insidious, even if it wins. Especially if it wins. Let that paradox settle in your mind for a moment. You take a trade outside your system. Maybe the setup was marginal. Maybe you were bored. Maybe you were tilting from a previous loss. But this time the trade works. Price moves in your direction. You close it for a profit. Your account balance increases. Dopamine floods your system. And your brain, that beautiful, pattern-seeking, survival-optimizing machine, learns exactly the wrong lesson. It learns that the rules are optional. It learns that discipline is negotiable. It learns that you can deviate from your plan and still be rewarded. This is how winning trades become more dangerous than losing ones. Because you train your brain to act without patience, to trust impulse over process, to value outcome over method. You're essentially rewiring your neural pathways to associate rule-breaking with success. The damage doesn't show up immediately. That's why it's invisible. You don't see it in your P&L that day, that week, maybe not even that month. But it's accumulating like interest on a debt you don't know you're carrying. Your decision-making quality degrades incrementally. Your ability to wait for proper setups erodes gradually. Your confidence in your system, the very foundation of consistent profitability, develops hairline fractures that will eventually shatter under pressure. Think of discipline like a muscle, but also like a dam. Every time you exercise it properly, seeing a marginal setup and choosing to pass, feeling FOMO and choosing to wait, experiencing boredom and choosing to embrace it, you make it stronger. But every time you override it, every time you take that just this once trade, you're not just missing a workout. You're creating a crack in the structure. And water always finds the cracks. The cruel irony is that overtrading feels productive in the moment. You're active, engaged, analyzing, executing. You look like a serious trader. You feel like a serious trader. But productivity in trading isn't measured by activity. It's measured by alignment with your edge. And every trade that deviates from that alignment isn't neutral. It's corrosive. It's teaching you, slowly but surely, that your system doesn't matter. If overtrading is so damaging, why do intelligent, educated, self-aware traders keep doing it? Why do we repeat the same pattern week after week, month after month, sometimes year after year? The answer isn't ignorance. It's not that traders don't know better. It's that overtrading satisfies psychological needs that run deeper than the desire for profits. Overtrading feels productive. This illusion is powerful because we live in a culture that worships busyness, that equates activity with achievement. In most professions, doing more generally yields more results. More hours studying leads to better grades. More hours at the gym leads to better fitness. More hours practicing an instrument leads to better skill. But trading inverts this relationship. More trading often leads to worse results. Yet our conditioning doesn't care about this nuance. Our identity is wrapped up in being doers, and trading challenges that identity at its core. Meanwhile, sitting on your hands feels uncomfortable. Deeply, viscerally uncomfortable. There's a restlessness that builds when you're at your desk, platform open, charts loaded, indicators ready, and nothing to do. The silence becomes deafening. Your mind starts to rationalize. Maybe I'm being too strict with my criteria. Maybe this market environment requires adaptation. Maybe I'm overthinking and missing opportunities. These thoughts aren't random. They're your psyche trying to resolve the discomfort of inaction by creating permission for action. The mind looks for action to avoid silence. This is the crux of it. Silence in trading means confronting uncertainty. It means sitting with the reality that you don't control when opportunities appear. It means acknowledging that sometimes, often, actually, the best thing to do is nothing, and nothing feels like failure to a brain wired for survival through action. In our evolutionary past, stillness could mean missing food or becoming food. That ancient circuitry doesn't distinguish between waiting for a trade setup and waiting in a dangerous environment. So we fill the void. We take the marginal trade. We convince ourselves it meets our criteria when it doesn't. We adjust our strategy midstream to justify the trade we already want to take. And each time we do this, we're not just making a trading mistake. We're avoiding the deeper psychological work of becoming comfortable with inaction, with uncertainty, with the fundamental truth that great trading is mostly waiting punctuated by brief moments of decisive action. Now let's talk about how overtrading compounds into something far more destructive, the emotional loop. This is where occasional overtrading transforms into a psychological pattern that can destroy even experienced traders. And it follows a sequence so predictable, so universal, that once you see it, you'll recognize it in your own trading history with uncomfortable clarity. It starts with a loss, not necessarily a big one. Sometimes the small, stupid losses hurt worse because they feel so preventable. You took a trade you shouldn't have, or you held too long, or you exited too early. The specifics don't matter. What matters is the emotional residue it leaves, frustration. That hot, restless feeling that sits in your chest and demands resolution. Your ego is bruised. Your account is lighter. And your brain interprets this as a problem that needs immediate solving. This frustration quickly metastasizes into something more dangerous, the revenge trade. You don't call it that, of course. You tell yourself you're getting back in tune with the market or finding a recovery opportunity. But the truth is darker and more primal. You want to prove you're not a fool. You want to reclaim what you lost. You want to erase the previous trade from existence by making the next one win big. So you scan the charts with confirmation bias on full blast, seeing setups everywhere because you need to see them, because inaction right now feels like surrender. And then comes the bigger loss. Not because the market suddenly became more dangerous. Not because your strategy stopped working. But because you changed. Your risk management relaxed. Your entry criteria lowered. Your position size increased. Your stop loss got wider or disappeared entirely. You traded your emotional state instead of your plan, and the market, indifferent, mechanical, unforgiving, took the other side of your desperation. This is the loop. Loss, frustration, revenge trade, bigger loss. And the truly insidious part? Each cycle makes the next one more likely. The bigger loss creates more frustration. The deeper hole creates more desperation. Your trading account becomes a mirror reflecting your emotional control back at you, and what you see becomes increasingly difficult to recognize. The trader you wanted to be, patient, disciplined, systematic, feels like a distant memory replaced by someone reactive, impulsive, and scared. Somewhere in the middle of the overtrading cycle, something shifts that most traders don't talk about. Your relationship with yourself changes. This goes beyond bad trades or account drawdowns. This is about who you believe you are and the growing gap between that identity and the evidence accumulating in your trade log. You started trading with a vision of yourself. Patient, disciplined, strategic. The kind of trader who waits for perfect setups, who follows their plan with military precision, who treats trading like a business rather than a casino. You've read the books. You've studied the charts. You know intellectually what you're supposed to do. You might have even done it successfully for stretches of time. That trader exists in you. You've proven it. But lately, you don't recognize the person clicking the buy and sell buttons. This creates a cognitive dissonance that's genuinely painful. You're not stupid. You can see the pattern in your trade history. You can see the timestamps of trades taken minutes apart, all outside your system, all driven by something other than edge. You can see yourself becoming the stereotype you once dismissed, the emotional trader, the gambler, the person who just can't help themselves. And this recognition triggers a shame spiral that makes the overtrading worse, not better. Because here's what happens. The shame makes you want to prove yourself. I'm better than this, you think. I'll show myself I can be disciplined. So you approach the next trading session with determination, with renewed commitment to your rules. But determination isn't the same as emotional regulation. Willpower isn't the same as psychological healing. You're bringing the same wounded psyche to the charts, just with a fresh coat of motivation paint over it. and when you inevitably take another bad trade because you haven't actually addressed the underlying emotional drivers. The shame intensifies. I knew better and I did it anyway. What's wrong with me? This self-judgment doesn't create change. It creates more emotional dysregulation, which creates more overtrading, which creates more shame. You're not just fighting the market anymore. You're fighting yourself, and it's a war with no winners. The trader you wanted to be feels increasingly like a lie you told yourself. And every trading session becomes not just about profit and loss, but about whether you can still become that person or whether this is just who you are now. Let me share something that changed my entire perspective on trading, something so simple it sounds almost stupid when you first hear it. The best traders don't trade more. They wait more. That's it. That's the secret hiding in plain sight while everyone's looking for the next indicator, the perfect strategy, the optimal time frame. Think about the traders you actually respect. Not the social media personalities flashing screenshots. Not the course sellers promising easy money. The real ones, the people with decade-long track records, the institutional traders, the quiet professionals who've survived multiple market cycles. What do they have in common? It's not that they found some magical setup that appears constantly. It's that they've mastered something far more difficult. The ability to do nothing exceptionally well. This sounds passive, maybe even lazy, until you actually try it. Sit at your trading desk for 4 hours with your platform open and take 0 trades. Not because opportunities didn't appear, they always appear if you squint hard enough, but because none of them met your exact criteria. Feel that restlessness building in your chest. Feel your mind generating reasons why this setup is close enough or why your criteria might be too strict. Feel the voice that says doing nothing means you're wasting time, missing opportunities, not really trading. Now imagine doing that day after day, week after week. Imagine watching price move without you, watching other traders post wins, watching your friends ask, "How's trading going?" and having to say quiet lately. Imagine being okay with that. Imagine being so secure in your process that external action matters less than internal alignment. This is what separates consistent profitability from perpetual struggle. Not better pattern recognition, not more sophisticated indicators, the ability to wait. The paradox is beautiful and brutal. The less you need to trade, the better you trade. The more comfortable you become with an action, the more powerful your actions become. The more you can sit with boredom, uncertainty, and silence, the more you can actually hear what the market is telling you instead of what your emotions are demanding. Waiting isn't passive. It's the most active thing you can do as a trader because it requires you to actively resist every impulse telling you to do something. It's discipline in its purest form, not controlling your entries and exits, but controlling your need to enter and exit. So how do you actually break the overtrading cycle? How do you move from understanding the problem intellectually to solving it practically? Because awareness alone changes nothing. You can know exactly what you're doing wrong and still do it. The gap between knowing and doing is where most traders live permanently, and bridging that gap requires specific, actionable changes. First, and this is non-negotiable, you need to create friction between impulse and execution. Make it harder to overtrade. If you're clicking buttons too easily, add steps. Some traders literally write out their trade thesis in a journal before entering. Every single trade, no exceptions. If you can't articulate why you're taking the trade in written words, you don't take it. This sounds tedious because it is. That's the point. Overtrading thrives on ease and speed. Deliberateness kills it. Second, separate analysis from execution. Set specific times for chart analysis and different times for trade execution. When you're analyzing, your platform's order entry should be closed. When you're executing, you're only implementing decisions already made, not making new ones on the fly. This prevents the dangerous loop where analyzing leads to seeing setups, leads to emotional entries, leads to regret. The best trading decisions are made when you're not in a position to immediately act on them. Third, and this might be the most important, keep a specific overtrading journal separate from your regular trade log. Every time you feel the impulse to take a trade outside your system, write it down even if you don't take it. Note the time, the emotional state, what happened before this impulse, what you're telling yourself to justify it. You're not trying to stop the thoughts. You're trying to observe them. Because once you see the pattern of when and why these impulses arise, they lose power. You start to recognize, oh, this is that feeling again, instead of believing it's a genuine market insight. Fourth, redefine productivity. You need to literally rewire what success feels like. Start measuring yourself by criteria followed, not trades taken, by impulses resisted, not profits gained, by system alignment, not account growth. This sounds like platitudes until you actually do it, until you're in a trading session with 0 trades taken and feel genuinely proud because 5 marginal setups appeared and you passed on all of them. We arrive now at the closing truth, the one that every trader eventually faces, whether they acknowledge it or not. If you can't sit with boredom, the market will teach you patience the expensive way. Not might teach you, will teach you. This isn't motivational speaking. This is pattern recognition across thousands of trading careers, including my own. The market is a patient teacher with infinite resources and 0 sympathy. It doesn't care about your bills, your goals, your ego, or your timeline. It will simply continue taking money from impatient traders and giving it to patient ones, day after day, year after year, until the heat death of the universe. You can resist this reality. You can argue with it. You can believe you're the exception. But the market doesn't negotiate, and it never runs out of lessons to sell. Here's what that expensive education looks like. You'll lose money you didn't need to lose. You'll miss opportunities because you exhausted your capital on garbage trades. You'll experience drawdowns that could have been avoided entirely. You'll damage your confidence, not because you lack skill, but because you couldn't sit still long enough to deploy it. You'll waste months or years learning through financial pain what you could have learned through psychological work. The market charges tuition in dollars for lessons that could have cost you nothing but discomfort. But here's the hopeful part, the part that matters if you're reading this and seeing yourself in these words. Awareness is the first step toward change, but only if you actually use it. You now understand the emotional cost of overtrading. You understand the loop. You understand why you do it and what it's really costing you. This knowledge is valuable, but only if you transform it into behavior. The question isn't whether you're capable of patience. You are. The question is whether you're willing to prioritize long-term identity over short-term comfort. Whether you're willing to feel the boredom, sit with the discomfort, and choose differently. The market will keep offering you the same lesson, charging more each time, until you finally learn it. Or you can learn it right now, in this moment, and start trading like the person you actually want to become. The choice, as always, is yours. But the bill for the wrong choice keeps getting bigger.